The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN, 8:30 a.m. on Thursday. We're going to get initial weekly jobless claims in a moment, waiting for that number to hit the tape. Right now, we got markets in positive territory, starting things off, jumping over to the S&P. We're positive by 18 points this morning, trading at 37.11. We were up to 37.17 overnight. A lot of optimism about possible stimulus or relief deal from Congress to the tune of $900 billion. Whether we get more details on that this morning, we will find out. Whether that stretches over the weekend, whether it gets done, but seems to be all indications are progress, hopefully. Yesterday, right, we had retail sales, 1.1% decline for the month of November. Harsh numbers there for retail sales. Hopefully that spurs on our elected officials to get done what needs to get done, help some of those people hurt the most going on right now. Can't imagine some of the businesses that are relying on, whether it's restaurants come to mind first and foremost, right? But travel, leisure, airlines, hotels, a lot of industries hit pretty hard. Okay, weekly jobless claims number before we get into the rest of the indices and the likes. Weekly jobless claims, 885,000. So the market was looking for about 808. This number continues to climb up. I guess you could say good news when you don't get a million, because that was definitely something that was in play. Headline number 885 for the week. Strong numbers just continuing over there. In terms of, continuing on a weekly basis, 900,000. Folks, I say it every Thursday. Love doing my show, my program, my show at 8:30. We get a lot of economic numbers that come out at 8:30. And every time that number comes out, I say you got to remember that prior to COVID, this would be a record, an all-time record for an initial weekly jobless claim. I believe the record was something like 692,000 jobs ever. It's never been this quick. The pain has never been this dramatic. It's remarkable. You got to go back that far. You're talking about never before did we have 700,000 people more filing for unemployment initially on a weekly basis, and now we've had that happening since the middle of March. And folks, it's about to be January. Craziness. Nonetheless, S&Ps, no real huge reaction right out of the gate. Pretty much what's expected. S&P market overall waiting for stimulus relief from Congress. That's at least what it seems to be. NASDAQ, NQ, up to 12,750 overnight. We're 58 points in the positive right now at 12,728. Dow Jones up an even 100 points right now at 30,176. The Russell up 9 points as well at 1962. How about it, folks? Bitcoin. Have you seen the headlines yet this morning? We almost made it to 24,000. Talk about an acceleration, folks. We did the program yesterday. I'll back it up, right? We had just made all-time highs. Here's 10 o'clock, 24 hours ago. You're talking about, yes, December 16th, 10 a.m. We were trading at all-time highs then. Folks, you traded up more than $3,000 from that price level. You traded from $20,800, $23,915. Right now, you're trading $23,300 in Bitcoin. The acceleration is on. We got it all back. This goes back to December of 17. When Bitcoin went live on the CME for futures, you go down to 3,000. You get an acceleration. We go back down for the March lows of this year. We'll call it the COVID low of 42.10 when the market had collapsed. And we're now at almost 24,000 on Bitcoin. Putting it on a 15-minute. You see the action. That high made it about 4:15 a.m. Eastern time. But even now, 7:45, these moves are mammoth move. This one bar, we're looking at 15-minute bars. You're talking about below 23,000 to $410 bar alone. Bitcoin moving every 15 minutes right now. All right, what else we got in commodities? Crude continuing to trade higher, 48.80, the high overnight. Remarkable when you put crude jumping around. We had this long consolidation stretching from about June to the middle towards end of November. That high of that consolidation was about the 43 and change area, we'll call it. We're now $5 above that price level. Crude, really. We started the year in the 60s. The drop-off on March 6th when the Saudis repriced their oil, basically sending a cascade. It took from March 6th. We ended up getting negative prices on April 20th. So it took about 4 or 5 weeks, but the pain really escalated. But man, crude just continues to rise. Natural gas, $2.69. Talk about some volatility in natural gas, right? We go from 144 to 339 on October 30th. And as the market skyrocketed for the month of November, you had natural gas pulling back in a big way. 269 right now. Gold contract, how about gold? Up $26 today. Check out that run. How about that number, folks? 1888 and 80 cents. That's the high this morning. We're trading at 1886 right now in gold. You put gold on the daily, quite a pop we've gotten. Now you look at the low we had, remarkable, right? We made to 1450. Gold, one of the quickest ones to rebound. This is a daily, folks. I'm just going to zoom in to the pandemonium in March, okay? We're dealing with like March 9th. It is here. That's where gold really started to escalate. We go from 1700. And what do we got? 3, 6, 9 trading days, even 6 trading days, I guess. You make it down to 1450. And then in 3 trading days, you go from 1450 to 1700. I mean, that period in March, folks, it just, if you didn't know it at the time, and I didn't know it at the time, I kind of did. But there's not many times that you see opportunities in markets like this, for long-term investors especially. Just remarkable action when you look at some of the pullbacks we got in some of these big companies, right? Amazon pulled from 2,200 to 1,600, and basically we've been floating around 100% return off that low since then. Even if you got it under 2,000 anywhere, you had a period of time from February 24th, and you could really zoom it in on March 4th, to a period of time of April 6th. Folks, that was more than a month that Amazon chopped around there before everybody figured out, hey, you know what? Everybody's ordering all this stuff from Amazon anyway, no matter what's going on in the world right now. I mean, we saw it with the housing stocks, right? Lows, just crazy action. I got some Fibonacci numbers on here, but we were at 125. You got cut in half to 60 on lows. Crazy, crazy action across the board. Even, some of the likes of Apple, you go from 80 down to 53, right? Everybody was going to have to rely on their phone. There's just panic selling. Long-term investing, some great opportunities down there at some of the lows. All right, jumping back to short-term charts this morning. We got a lot to cover. We'll get more into the weekly jobless claims after the break. But right now, jumping to the 10-year, I'm pulling up the yield. We're looking at a yield right now of 0.923%. That note market, you can see where we're chopping around. The consolidation on this on the 10-year, maybe the lower part of that, about 137.16, maybe a hair below that. You're talking about the upper boundary of about 139.18. Every time we've gotten down there and we've approached a 1% yield, we've got a bounce, kind of flirting with that area for that 10-year. Interesting in light of stimulus, relief. The relief package supposed to have reportedly some payments going out for people making certain incomes, unemployment benefits extension as well, all of that leading to more capital, cash in people's hands that need it, that money being spent being inflationary, right? That's one theory of how things can go. And if it's inflationary, then you're going to see higher rates. Nonetheless, S&P is holding steady on the weekly jobless claims number. We're up 16 points right now. We'll come back, folks. We got some earnings. We're going to take a look at Rite Aid, Accenture. We'll be right back.
Hi, folks. This is Tom O'Brien. Are you looking to buy or sell gold, silver, platinum, coins, or bullion? We can help. At Tiger Precious Metals and Stones, we specialize in the buying and selling of gold, silver, as well as collectible U.S. and foreign coins. We not only buy your unwanted or broken jewelry, but you can trade that in for gold and silver coins, too. Call Andy now at 727-329-8245 for a quote over the phone and to lock in the current market price. Call us now at 727-329-8245.
TFNN has just launched our Tiger Dollar Holiday Sale. For a limited time, we've doubled all the Tiger Dollar bonuses where you can now get up to a 20, 30, or even a 40% bonus on your Tiger Dollar purchase. Tiger Dollars are good for all TFNN newsletters, webinars, and services and never expire. Whether you're a current subscriber or just thinking of signing up for any TFNN products in the future, this is a great time to get your Tiger Dollars. Happy holidays from all of us at TFNN.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We have the S&Ps positive by 16, trading at 37.09. I'm going to put a little bit of context real quick in the S&Ps, folks. Remarkable year that we are finishing up in the markets. We started the year off at about 32, 36. We're approaching 500 points to the upside. The reason why I say this is I've talked about it many times. All of this from October 30th, folks. Number one, you're sucking out the volatility and variance and unknown of an election. Market hates uncertainty. A lot of uncertainty coming into this election, more so than others, to say the least. Also uncertainty with the virus. Okay, now we have the certainty that we do have the vaccines. We just have to get them out and take them. Okay, if you're healthy out there, I encourage you to take them. I'm going to be taking mine. We got to do our part. Everybody, I tell, we're not getting out of this until everybody does their part, folks. I'm going to be doing my part. I encourage you guys all, you girls all, to do the same. This is all baked in that we have it now. But guess what, folks? Now reality has to live up to expectations. Okay, so the point being, we're 500 points positive for the year. We know what's going on, right? There's been winners this year, but to say that the market should the market be up 600 or 700 S&P points this year then? Or should it be up 300 or 400 S&P points? Is there going to be selling at the end of the year? Really interesting to see once the deal comes out in terms of the stimulus, which is pretty much baked into this market. Is it going to be a sell the news? And I would be wary of that, because this market, quite a strong return for 2020 when you think about where we've been and what is actually going on as we literally continue, folks, to set records on weekly initial jobless claims. As I just mentioned, prior to March, every single week we've had what would be an all-time record for initial weekly jobless claims, and the S&P is up 500 points. You know, there's winners, there's losers, as I mentioned, but be careful out there as we get a little frothy, where basically now the markets are priced for future expectations, which are very rosy. So how do you achieve higher prices? You have to exceed expectations. Well, expectations are pretty much that we're going to get over this thing in the next 6 to 12 months. I don't know how you exceed that pretty much rapidly, folks. That's what I mean, you can, but geez, we'll see what happens. All right, jumping around to some of the stocks with earnings. We'll start off with the consulting firm Accenture. We'll go with that. They're doing well, and strong numbers for a lot of these companies that have been able to work online. I mean, it's amazing the type of deals that we've seen done, right, in terms of buyouts, mergers, investment banking, and how that business is going to change. They earned $232 a share for the consulting firm. Estimate was $205. Revenue beat as well. They raised their full-year forecast. Demand for digital and cloud services remained strong as U.S. employees continue working from home. ACN is their symbol. Now, here's the long term. Check out that chart, right? From 213 to 137, we're going to open today at almost a double bagger from the bottoms. There's your 15-minute up to 262 on their earnings. Rite Aid out with their numbers, strong numbers as well, up more than $3 right now. You're talking about 17% to the upside for Rite Aid. How about an unexpected profit of 40 cents a share compared with a 5-cent loss? Gotta love that when you're an executive at a company and the expectation is you're going to lose money and you get to come out and say, no, we made 40 cents a share. Strong, and you see the acceleration for Rite Aid as they're trading higher on the daily. I mean, that's a big move for them. When you look at, you're going to open at 20, right? You're going to be far above what we've been dealing with almost all year. There's a daily chart we're looking at. We had the high right back here at 20.32, and right now we have a bid ask. It was straddling that price of 20.32. So we're open right at those highs. We'll see if Rite Aid holds that open this morning. General Mills, they beat as well. Lots of beats. What ended up happening was, you saw Fed Day yesterday, right? Things are not as dire as once predicted, which is great news. But they're still dire because they were predicted to be so bad. That's the way I put things. So these expectations, especially some of the biggest companies out there, they've been able to keep going. They have the infrastructure, the capital, the technology. General Mills beat estimates by 9 cents, quarterly earnings of $1.06, revenue topped estimates, homebound consumers buying more of its cereal and baking products. I would be guilty here, I'm sure, of plenty of General Mills making it into my grocery cart. And guess what, folks, though? Did you just hear what I said? That was like beats across the board, right? Well, we're going to open basically flat this morning after a little volatility on General Mills. We're trading at about 58.92, almost exactly where we were yesterday, on pretty strong numbers for that equity. All right, I'm going to slide down to Roku. Check out this one. Talk about a strong stock, folks. Roku, they're going to carry AT&T's HBO Max streaming service beginning today. I have a Roku. Got plenty in my house. Do not subscribe to HBO Max. But I imagine I might be at some point with them releasing their whole slate of movies for 2021 on their streaming service. I found this especially interesting when you pull it up. Talk about a bargaining chip, right? You're the executive for HBO Max or AT&T, whoever's doing the wheeling and dealing over there. And you say, hey, are you really not going to carry me now when we're releasing, 10 big budget box office films direct to streaming, and you're going to be a streaming platform not carrying HBO Max? And guess what the market said? The market said, yeah, that's a smart move, Roku. Make that deal with AT&T, and we'll trade you up more than $20 this morning to $346 from $325. You put this thing on a daily, and it don't stop, folks. We're going to open at all-time highs. Just a crazy acceleration. And again, they got a lot to live up to now, but that seems to be a very strong company, the way that they are capitalizing on being one of the go-to avenues to streaming, and then how they're going to capitalize off of that. I mean, I have Rokus. I've never even used the Roku channel, folks. But I'm sure they're using some type of advertising for me, right? I mean, they're able to try and put apps in front of me potentially or whatnot. And somehow they, I'm sure, are making more money off me by just whether it's charging some of like a Netflix or so forth, having, the first app that you see, the one that they're trying to get people to. I don't know, but strong stock, and I love their products. I do. There's just a lot baked into this right now. I mean, market cap wise, we're talking about, folks, valuation. How about a $44 billion company? You got a lot to prove when you're up in the approaching the $100 billion liner soon enough. All right, some of the other stories out there, we have Lennar. That was the other one I wanted to jump to with their earnings. Strong earnings for them. They're trading higher this morning. How about a quarterly profit of $2.82 a share? They beat the consensus of 2.37. Home builder revenue above forecast. Home builders continue to benefit from low mortgage rates, high demand due to the pandemic. Yeah, and Lennar is trading higher today. We'll pull it up on the daily first. There's your Lennar action, and we're going to open at about 77 today. So there's your acceleration, kind of up to where we were just in late November. All right, folks, head on over to the front page of TFNN. This is the last weekend of our Tiger Dollar sale. You can get up to a 40% bonus on your purchase if you subscribe to any newsletter, any service, TAS Profile Scanner, the Art of Time in the Trade Charts, Path of Least Resistance, Mastering Probability, Fibonacci 24/7. Mr. Larry Pesavento coming up next. You ever want to try his newsletter? My newsletter, Rocket Equities and Options. Folks, all our newsletters, right under the newsletters tab. All right, all of these you can use your Tiger Dollars for. I encourage you to check it out. They all come with a 30-day money-back guarantee for new subscribers. And then jumping over to services, again, all of the Tiger Dollars, good for any service or newsletter at TFNN that you see here listed under newsletters or services. They never expire. We had some Tigers that were transferring their Tiger Dollars to other Tigers to attend some of the live trading webinars we had going on just last week. Check that out. Runs through Sunday. Never expire, folks. They automatically get used for any good or service once applied at TFNN for those recurring subscriptions. Check it out on the front page of TFNN. We'll be right back, folks.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
Bam! If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So among other things we have going on here is we have a scheduled vote Thursday on the Moderna vaccine, expected to get clearance for emergency use. A favorable vote will likely clear the pathway to Moderna's vaccine becoming the second approved for use in the United States behind the Pfizer vaccine. Checking out Moderna shares. It's been quite a drop over the last 5-6 days as this thing works its way through. Interesting in light of the story out early in December. So we're talking about a couple weeks ago is that Merck had divested its stake in Moderna sometime in the fourth quarter. Just be careful, folks. If anybody understands the real value of a company like Moderna, it should be people in the industry at Merck. Doesn't mean that this thing can't catch a bid. But they saw Moderna trade up to a high of $95 in July. They then saw the equity trade down to a low of 54. So you're talking about $20. You're talking about a 30% decline from July 17th to September 8th. They chose to exit that trade, or investment, we should say, not really a trade, because they had $50 million investment they made in 2015, this was. And they got out of that sometime in the first half of the fourth quarter. My guess is, folks, they saw that low. They saw it get back up to an area of the high 70s, and they said, shame on us for not taking it when it got here, because the value is real at this level, and we're going to exit our trade. I mean, you just saw this thing drop $50 from the high we had on December 1st, right? And I believe that was the day the efficacy was revealed from Moderna to be up there with Pfizer. Just be careful. Anytime you see something like that, doesn't mean it can't trade higher, but if you start adding a fundamental take on that, Merck's not making a stupid decision like that. They understand the value of what Moderna is going to push out. All right, they made that trade after September. Okay, they had the very real thought that this could be a big deal. Nonetheless, it's backed off, and be careful of that one. All right, S&Ps, folks. We're positive 15 points. Weekly initial jobless claims, it was a big number. You're talking about approaching 900,000. But the market, it shakes it off. Let's see if we get some stimulus, some relief. We're going to get Larry Pesavento coming up next with Trade What You See. Stay tuned, folks. We'll be right back.